Okay, hello and welcome back. Welcome back. So, as you know, due to some personal reasons, I will not be trading for the next few days. So, therefore, bro, I didn't want to leave you hanging, okay, because I'm your brother, all right? Therefore, I decided to make a little backtesting session for you so that we can blindly follow our strategy, and then therefore we can see what would happen if we would patiently follow the strategy. Okay, it's that simple. So here I have Bitcoin Cash opened up. Okay, it's from Wednesday, the 18th of February. So let's take a look what we would do at the New York market open. Okay, let's take a look. So here we have daily candles. Okay, and as you can see, the daily candle started printing more or less somewhere on this line. What have we done? Since it started printing, we have gone upwards and then downwards. What does that mean? That means, based on OHLC theory, you know already that this means we have created a high, we have created a low, so at New York we will create closing. It's that simple. So this was the first confirmation that on New York we have a high chance to go higher. Okay, then what happened at New York Open? New York opened at 3:30. What happened? The price went directly lower. It swept London session low in pre-market session and pre-market session low in New York session open. Okay, so pre-market low was swept, and then what did we get? We got a massive move up and then break of structure. You can see break of structure here. So what would that tell us? That would tell us that we have the following things. We have bullish fair value gap, and we have equilibrium from down here all the way to the first high after break of structure. Okay. Additionally, what do we have? We have the first sweep, okay, which is, why doesn't it work? Okay, it's here. So this is bullish order block, sorry. We have equilibrium, and then we have a fair value gap right now here. And now we just follow the price. Does the price touch both order block and equilibrium? No, you see, the candles are here. We don't touch anything. So then we follow the next high. The next high is up here, okay? What do? We drag the equilibrium all the way upwards, okay? And then what happens? The price collapses, sweeps the pre-market session high, collapses, okay? And then it touches with this 5-minute candle, it touches 0.5. What does that mean? That means the following. We go to 1 minute, okay? And what do we see? Now finally the price touched 0.5 on equilibrium. It touched then bullish order block, okay? And what do we have? Look what we have. We have break of structure with this little candle at the same time as, let me delete this shit, at the same time as we have inversed fair value gap right now here. Okay, with this candle, what do? Once that happened, this candle is below 0.5 on equilibrium. What does that tell us? That tells us to put stop loss below here, okay, below the order block, and target 0.5 in my case, okay? Good. We would take half of the position off, okay? So let me put it, let me write here stop loss, okay? Here we took half of the position off, okay? We put stop loss to break even. Then what do we have? We have 1.5, do we have it? Nah, we don't have anything, okay? 1.5 is up here, so we would leave the trade to run to 1.5, but what happened instead? Instead, we would get, unfortunately, stopped out, okay? So our trade would be 0.25 risk reward ratio, okay? Good. Now let's delete all of this and let's go to another asset. For example, okay, here I have little watch list. Let's go to Ethereum. What would happen today on Ethereum? Let's take a look. What do we have? Daily candle, let's say it opened, daily candle opened somewhere here, more or less. We went up, we went down. So what could we expect to go up and close? Okay, based on OHLC theory. Good. Now let's go back to our chart. I know that you are probably saying, oh, it's so slow, but have some patience, okay? Social media fried your brain, so now we are studying. What would we have? We would have sweep, pre-market session sweep, up, down, break of structure, okay? Good. What do we have? We have bullish order block, and we have here equilibrium. Does the price touch it? No. It creates a new high, but it's lower than this high, so we ignore it. Then it pushes higher, okay? What does it do? It sweeps pre-market session high, okay? And then by going downwards, what happened? Look, it swept the high, okay? It touched 0.5 on equilibrium. So what does that tell us? That tells us that we go lower, on a lower time frame, okay? We go on 1 minute. And what did the price do? We are looking for bullish trades, okay? We are looking for longs because based on OHLC, we have to make a high. We have to make a closure because we made a low. Then we broke structure to the upside on 5 minute. We have bullish order block and we are below 0.5, which is perfect for longs, okay? Now we are waiting that both order block and equilibrium are touched, okay? And now we take a look, when do we break structure? Let's say we break structure here with this candle, you see, this little white candle. Good, here we go long. We put stop loss below the order block, more or less here, and we target 0.5 on equilibrium. Yes. Did we get it? Yes, we did. Then what do we have here then? We have stop loss. Okay, once we hit 0.5, we put our stop loss to break even. We take half of the position out, okay, and then we target 1 to 5. What happens? Nothing happens because we get eventually stopped out. Now this is another win for us. Let's do 4 trades, okay, and see what would happen. Good. Now why did we get stopped out? Because of the following thing. Look, we got stopped out simply because we changed the trend on the retracement down, okay? Let me remove stop loss higher. Look what happened. We swept pre-market session high, and then that should give us a warning to go short, perhaps, okay? Why? Because we swept pre-market session high, obviously, and additionally, what did we do? We touched into all of those fair value gaps. You see, here we have a fair value gap on 1 hour. Then here we have 1 hour high, okay? Which is actually pre-market session, sorry. So we did that. So we had 2 draws on liquidity, pre-market session high and 1 hour fair value gap, which is right now here. So according to that, look what happened. We went down, we broke structure, okay? So what would that mean? We draw an equilibrium from the most recent high to the most recent low, okay? And then we wait to see if the price will touch equilibrium. Here it didn't, but what did it do? It touched order block, okay? So yeah, then therefore it continued lower and lower and lower. And then here we also had, look, we had a massive bullish fair value gap that got inversed, okay? And then here, by price coming upwards into this inverse fair value gap, this part, this little part, let me show you, this little part became balanced, okay? So then the price continued lower and lower and lower. It's that simple, okay? Now let's go to Solana. Okay, let's see what would happen with Solana. What do we have? Let's take a look. Okay, Solana is bearish. Daily bias is bearish. Those are daily candles. Okay, you see that we swept the high and then closed below it. So here I would look for shorts. Okay, but I would still, based on OHLC, I would still reckon that we would go higher. Why? Because look, we made a little high, then we made a massive move down. So I would again expect that we go higher and close, okay, based on OHLC. So let's take a look what the price gave us. I reckon that we will need 1 hour chart as well. Why? Because here we have 1 hour high, sorry, fair value gap, and we have 1 hour high right now here, which is also the beginning of a fair value gap. Okay, so let's go now to our graph. What do we have? Let's take a look. We swept pre-market session low, and then what happened? We broke structure here. Okay, let me change the color. We broke structure with this candle. Okay, so what does that mean? That means we have now equilibrium. We have the last move down that swept. Okay, where was the last move? This is bullish order block. Okay, and what happened? The price neither touched, the price didn't touch 0.5, so we keep going upwards. Okay, but remember, now we swept pre-market session high and we touched 1 hour fair value gap, the bearish one. So that would give us thinking that, okay, perhaps we go lower. Okay, so now let's first go through the bullish scenario. If we would just blindly follow our strategy, let's go through bullish scenario and then we will also go through the bearish scenario. So what would we do if we would want to have shorts? What would we do? We are below 0.5 on equilibrium. We are in bullish order block. Okay, so now all we have to do is wait for bullish break of structure, which happens right now here with this white little candle. You see here? I don't know if you see it, but zoom in. Okay, wait, let me zoom in. With this little white candle, what does that mean? That means we go long. We put our stop loss here below on 1.5. Stop loss, okay. And then we target 0.5. Let's take a look. Where is 0.5? Okay, 0.5 is here more or less. Good. We target 0.5 here. Good. We move our stop loss to break even. Let's delete all of this shit because it's a lot of different things. Okay, we hit 0.5. Then we put our target to 1.5. But then we get stopped out. Okay, so that's additional plus 0.25. Okay. All right. Now that was the bullish scenario. Now let's take a look at the bearish scenario. Okay, because we wanted to test both of them. So once we go to 5-minute chart, what do we see? This huge move upwards, okay, swept pre-market session high and touched 1 hour bearish fair value gap, okay? And then what happened here? We went up, we reversed, we inversed this fair value gap, okay, which is huge as fair value gap, okay? We inversed it and boom, with this candle here, you see this candle, we broke structure. So what do we have? We have inversed fair value gap. What do we have here? Here we have bullish order block. Okay, what else do we have? We have equilibrium now. Here is the most recent low, that is also the lowest low at the same time. And what do we have? You see, the price didn't touch equilibrium, but it touched this bearish order block, and also it touched inverse fair value gap. So now this price right now here is balanced. Okay, this range is balanced, but I wouldn't catch that trade because we didn't go above 0.5 on equilibrium. Okay, maybe if you would want to risk it, what you could do is to put stop loss here at the beginning of the order block. Order at the beginning of the order block, put your stop loss here above, and then target 0.5. Yes, you would get it. Okay, and then you would move stop loss to break, you would move stop loss to break even. Okay, it's that simple. And then you would let the trade run to 1.5, which is here. And then once you would hit 1.5, you would move your stop loss then slowly and slowly lower and lower and lower. Okay, it's that simple. Now let's choose another asset. Let's not choose Atom. Cosmos. Why not? You will ask, because on 1 minute you see how weird candles are, man. They are all choppy and shit. Okay, so I don't want to use that. Let's go another crypto. Let's go to some random weird ass strange crypto. Wait, I have an idea. Dino Sol. Fuck me, man. That crypto is strange. Nah. By the way, I shorted this shit and I made half of the money back. Let's go hype. Okay. That's hyper liquid, I reckon. Yes, it is. Okay, let's go. Sorry for this. Okay, let's put Bybit. Let's take a look. Good. We are here. What would we do? We have bearish. This is bearish daily bias. Okay, so we are expected to go lower. Okay, because but based on OHLC, you can see that we made a high, we made a low, so we would have to go do the closing. Okay, but daily bias is bearish. Let's take a look. Let's go. Okay, what happened? We swept pre-market session low and London session low. Okay, then what happened is we broke structure to the upside here. So what I will do is draw an equilibrium like this. Then what do we have here? We have order block. And then what would happen? The price would go higher. Okay, and then what would happen here? Look, as we would wait for a retrace, the price broke structure to the downside after sweeping pre-market session high. Let's take a look if we also had any 1 hour high. Nah, nothing. We had nothing. Okay, so the price broke structure on the 5 minute. So that would mean that now we are in a bearish trend. Okay, so I would say, okay, fuck it, fuck all of this, fuck this as well. Now let's go short. Why? Because we broke structure. Okay, so here we have, wait, down, up, no, up, down, up, down. Okay, so now here we have the first like equilibrium. Okay, and then we go lower and lower and lower. Where do we create the new low? Here. And then we go lower. Where do we create a new low? Here. You see, the price didn't touch anything. So then where would we create a new low? All the way down here, and then also all the way down here. Okay, So yeah, now you see the price didn't go into the equilibrium, so hyperliquid was not that good trade, okay? So yeah, that would be it. It's too long video already, you are not paying attention anymore. We would make 0.75 of like trading with 3 trades. So yeah, at this point I want to invite you to basically join my Discord server that I have here. We have daily analysis, we have trading breakdowns, we have self-improvement, basically everything that we need to become better traders and stronger men, okay? Because this is our mission, we have a community for that. So join the Discord, it's free, I'm not selling shit. Here we have also subscribe to my YouTube channel, do the hard work, and see you tomorrow with another backtesting, because I'm still not trading, because I'm not alone at home. Okay, do the hard work and see you on top of the world.